2023 is going to be one of the most interesting years in a very, very long time. Stocks are currently at the cheapest level for the last 2 years. However, there is a chance for them to drop even further down. Real estate has only started to fall, but the Federal Reserve is looking to increase the interest rates even further. Treasuries are also beginning to look really interesting. But there is the chance of missing out on even bigger opportunities if you're not paying close attention to what's actually going on. Which is exactly why I wanted to share my view with all of you guys on how I will be investing in 2023, where the big opportunities are, which mistakes I've made in 2022, but also how you can prepare to start making money in 2023. So, what makes 2023 so different from the last year is that we're finally starting to fight the repercussions of a high interest rate and a really high inflation that is finally starting to cool down. Consumers are only spending more money because they're dipping into their savings account. Mass layoffs are getting more and more common. And within 6 months, in 2022, the US citizens has lost more than $9 trillion. Amazon made history by being the first company to ever lose $1 trillion in value. And it feels like the chance of a 2023 recession is getting higher day by day. 2022 has for very, very many investors, including myself, been a year where we have tried to navigate the market and find a way to not lose as much money. It is the first year where very, very many younger investors have tried to lose money within the stock market. So now that the markets have somewhat begun to stabilize and a lot of companies are trading at fair value, then here's my blueprint of how I'm going to invest in 2023. Before I go any further, then I want to say that making a video like this one takes a really long time. So if you actually like today's video, then please press the like button below the video and make sure to subscribe to my channel if you want to see more videos like this in the future. With that being said, then let's start talking about my investing strategy. The last couple of years, I've had the majority of my money tied up within the S&P 500 index, plus some other high-risk companies like Tesla and other tech companies. Plus, I've also been investing into real estate. I had the belief that by investing into the S&P 500 index, then I would get a lot of diversification and I would get a really low risk, which meant that I could invest more into other higher risk companies. However, that strategy has changed a lot within the last year. I have learned a lot from following my investing strategy. However, it is time for me to change my strategy and make it fit with the current market. And this is what I plan on doing. I personally think that we will see a lot of good investing opportunities in 2023. And it is super important to know what you're looking for so that you don't miss it. But let's start talking about the stock market, because this is where I will invest the majority of my money. It is safe to say that the markets have increased a lot. And besides 2022, then the worst year since I started investing was actually 2020, when COVID-19 made the world enter lockdown. However, even with COVID-19 and everything going on, then did the stock market still increase by more than 16% in 2020. It is super important to understand that these historical returns are not a guarantee for future returns, and it is not a sign of a healthy market, with the S&P 500 index being down by close to 20% in 2022. And the last time we saw that high negative returns was all the way back in 2008 with the Great Recession, which is now more than 14 years ago. This also implies that for a lot of people, including myself, then this is the first time where we've really tried to experience high negative returns, and that is a huge wake-up call. And it is a sign that investing has high risk and should not be taken lightly. Which is also why that my approach to investing is long-term, with money that I don't intend on using for the next 20 to 30 years. In that way, then all of these fluctuations that we see right now does not really make a difference for me. The market returns 8 to 9% per year to investors. Therefore, I believe that by staying invested in the market over the long term, then the chance of you making money is really, really high. And another way of looking at this is by looking at what is called the 20-year rolling period for the S&P 500, which is basically a snapshot that determines how much money would have made through every single time frame. And surprisingly, throughout the last 100 years, a 20-year hold has never lost money. The worst 20-year hold actually occurred in 1948 with just under 4% per year. And the best 20 years started back in 2001 with more than 16% on average per year. So the longer you stay invested for, the higher is the probability of actually making money. I will keep on investing into the stock market here in 2023, no matter what happens, just like I've done the last couple of years. And the majority of my money will still be invested into the S&P 500 index. It is a very slow and a very boring approach to investing. However, it is the strategy that I believe is best for me, and this is probably the best strategy for a lot of you guys as well. Next, we should talk about an asset where I will also invest a significant proportion of my income, and that is real estate. I am investing into the real estate market several times a year. However, I actually don't own any physical real estate. Some of you might be wondering how that's possible, and that is because I'm investing into what is called REITs, or real estate investment trusts. These are basically very big companies that own or operates income producing real estate assets. REITs are actually obligated by law to have at least 75% of its total assets in real estate. And 75% of the total income must come from rent or other things related to owning real estate. In other words, then are these companies by law actually obligated to only operate within the real estate market. So investing into REITs is actually a great way of getting exposure to the real estate market without actually buying any physical real estate and having to deal with tenants, contracts, taking on massive amounts of debts, and so on. And the best part is that these companies are actually obligated by law to pay out at least 90% of their total taxable income as dividends. And that makes REITs extremely good for dividend investing. And that is exactly why I like investing into REITs. So overall in 2023, I have a feeling that it's going to be more of the same as what we saw in 2022. Personally, I don't think that stocks or any other assets for that matter will recover in 2023, but I hope to start seeing some positive returns late 2023. But until then, I don't expect to make a lot of money from being invested in 2023. However, I will keep on investing so that when the recovery actually starts, then I will have a lot of money invested, which means that I will start to make a lot of money. I want to return my portfolio to the basics. I don't want to invest into higher risk companies. I want to invest into broad index fund and into the general stock market and into the general real estate market. And that is something that has proven to work for over a century now. As mentioned, then I am a long-term investor that sees the market today as a good opportunity to buy cheap stocks that will make me money in the future. And I don't plan on selling any stocks here in 2023. That was all I had in today's video. Thank you for watching the video, and if you actually liked today's video, then don't forget to press the like button in the video and subscribe to my channel if you want to see more videos like this one in the future. Thank you for watching and see you in the next one.